Yeah. So this is a tax masterclass wherein we will be discussing the three main important concepts in the coming 3 days. And in the day one, we will be discussing income tax. We'll be revising on income tax and solving a section C question of income tax. And then we will also be discussing the most common mistakes that students do during their preparation. All right. Is everyone clear with this? Is anyone having doubts so far?
No doubts.
Great. So after the session, if you guys feel like you are having any doubts or anything, and all the students who are already in the revision course and in the test series batches, you know you have my contact details. You can always reach out to me. And for the ones who are enrolling for the webinar for the first time, I have already created a WhatsApp group and sent an email with the WhatsApp group link. You can either reach out to me there or personally ping me on this number. All right? Yes, no, maybe. It would be great if I can have everyone's reactions, guys, because I want it to be as interactive as possible. All right, now let's move on to the next thing. Yes. So this is me. I am Suhas Mohan, your tax mentor at Being ACCA. A small thing about me is that I have graduated from Usmania University in Hyderabad, and after that, I have completed my ACCA. I've completed all the 13 papers. I've not taken any exemptions so far during my preparation days. And also in tax, I've secured World Rank 1 by scoring 98%. So if you guys have any doubts or any issues, you can always feel free to reach out to me and I will ensure that I solve your doubts. But the only thing is, because I'm also a working employee at EY as an audit associate, it becomes difficult for me to text during my daytime and probably until 9 o'clock because I am working in the audit field. And this season, at least for the next until March end, is considered a busy season because of the multiple audit filings. So I might not be able to respond in timely manner or immediately, but I'll ensure to at least resolve your doubts by the end of the day or the beginning of the next day. All right. Yes. So now coming to the passing rate. So tax has considerably has a lot higher passing rate in comparison to the other papers because in tax, if you're able to remember the tax rules, the examination is very straightforward. You do not have to worry about anything that is coming out of syllabus or something that might be tricky or anything. If you're thorough with the tax rules, it will be within that boundary itself. All the questions will be tested only within the boundary and nothing else. So, the most and very important thing in your preparation will always be remembering all the tax rules. And for that, as I've mentioned, it is very important. I'm sorry. It's very important. One is consistent revision of concepts because if you're revising your concepts on a regular basis, you will be able to remember a lot of tax rules. Obviously, there would be one or two that you might be missing out towards your preparation. But if you do that on a consistent basis, like every day, since we are coming to the last 14 days of February, because Feb has 28 days itself, we are coming to the last 14 days of our month, and the exams are in the first week of March. It is very, very important that you do your consistent revision of all the concepts on a regular basis, along with solving questions. All right. The more number of questions that you solve along will help you understand what are the areas you're going wrong in, and at the same time, the amount of revision that you do on a regular basis will help in reducing the mistakes that you do. So both of them are very interlinked, and for that reason, I always tell questions and revision should be done on regular basis. So for other subjects similar to audit and all, if you remember the concepts, once you start solving the questions, you'll be able to understand them better and write them. But tax, you will have to remember a lot of rules. Like it'll, if you consider any of the Kaplan or the BPP study text, you know that how heavy the books are. That means that shows the number of tax rules that you will have to remember, which is very important to remember because in examination you will be tested on any and every tax rule. Or it might not be that every tax rule will be tested, but majority of the ones that you've studied will be examined in your examination. All right. So that is why we see that the tax passing rates are usually above 55% or around 55%, because the more that you study, it will be within whatever you have studied and nothing will come out of it, or nothing might be trickier. The way that the questions are asked might be tricky, but if you go through the hierarchy of understanding the tax rules, it will be very easy to solve the questions. All right. So can I get a yes saying that all of you will do their consistent revision and solving questions from today onwards?
Yes.
Yeah. Thank you. Because the more you solve, the more doubts you get. I will be always happy to help you out at every step of the way until your last day. I will be there solving your doubts at any point of time. Okay? Don't worry at all. There's some issue with the slideshow. I'm not sure why that is not happening. We just move on. So yes, a little bit about the students that I've taught in the previous sessions. One of the students had actually secured 79% in the tax, which is actually a very good score. So for that, I remember when I was helping her out, I ensured that we were giving her the support until the very last day. Every time you have a doubt, do not stop yourself from asking me. Always any doubts you can ask me out, and I will be there to help with all your doubts and resolving them on a timely manner. All right. The more questions that you ask, the more I'll be happy, because I am sure that you will be at a good place. By hierarchy of questions, I mean hierarchy of the topics that you've studied. So whenever you study income tax, you need to understand the flow. I will be discussing about the flow and all. That is the hierarchy that I'm talking about. It's not the questions, but the hierarchy of concepts. Like how do you study the concepts that you're having in your tax exam? All right. Yes. Now coming to the course structure, we all know that we have 6 areas in taxation. One is tax UK administration, which is a very theoretical concept. In this, the theory will majorly revolve around how do you consider a person to be automatically a resident or not, and all of such things will be considered in tax UK and administration. It will not be tested majorly. That's why we call that a minor area, because we have other big fish, that which we call the big fish, because those are the other areas that you'll have to stress a lot on. This is just one chapter, and you will not be tested a lot, but you need to be very thorough with the theory part of it. Okay. Next, we have income tax and NIC liabilities. Guys, let me tell you something. Income tax and NIC liabilities will at least be tested for 25 marks in the examination. Income tax and NIC liabilities and corporation tax. Be sure that at least 25 marks will come from each of these areas. Like 115 marker question is for sure from income tax and NIC liabilities, and corporation tax has another 15 marker. So there you have your 30 marks, and the other 20 marks will be tested as a part of your section A. It can come in any format. They can either ask you about the tax administration, where they ask you about the dates, the penalties, and all of those, or they can test you about whether a person should be considered a resident or not, and all of those things. All right. So those are all what will be covered in the income tax. So always, I want all the students to focus a lot on income tax and NIC liabilities and corporation tax, because your 40 marks in the examination are dependent on these two areas itself. Your entire section C will be coming only from this and this areas. Is that clear? Give me a yes, probably. Great. And after that, we have the other areas: chargeable gains, inheritance tax, and value added tax. Chargeable gains, inheritance tax, and value added tax will be tested in each question of your section B. Like each case study, one will come from your chargeable gains, one will come from your inheritance tax, and one will come from your value added tax. At least that has been the scenario in the previous 3 items that we have seen. And also, if you see, the past papers or the pre-December or pre-September and pre-March mocks, you will find the same pattern that is being followed. So at least 10 marks in section B will be from this, and 5 marks will be from your section A point of view for chargeable gains, inheritance tax, and value added tax. So at least 15 marks will be coming from all these areas. Though in those, chargeable gains is a very content heavy area, so it is very important that you revise on all the available reliefs that are available. How do you calculate it for shares? How do you calculate the chargeable gains for residential property? The rules that you have to remember are very large, so it is important that you remember all of them. Like, you have to understand, for wasting chattels, what are the chargeable gain rules? Is non-wasting chattel exempt or not? So there's a lot to remember which will not be provided to you in the tax tables. So remember to prepare a lot, and that is why, because it is all content heavy, chargeable gains is considered a major area. Same thing with inheritance tax has a flow. Always, inheritance tax, you should remember, first it should be on gifts that are provided before that, gifts provided to an individual, then gifts at the time, then the any assets that are transferred at the time of death, and then it is on your death, all the estate value of your death. All these three are to be considered. So your preparation should always go in a structural manner. First, see the flow, what is happening first, then what is being revised, then go to the third one. If you do it in that way, you will be able to remember them better and you'll be able to apply it better. Is that clear? Yes. And then we have value added tax. Value added tax, though we call it a minor area, because the amount of rules to remember in that are very much straightforward. It will not take a lot of time to stress or remember that. So you can take up 2 to 3 days for value added tax. But all these other areas, you should stress a lot because of the amount of concepts that are there to be discussed in those areas. All right. So next thing that I want to talk about is the exam format. But because we are already at mid of February, I think everyone is already aware about the exam format. Does anyone want to tell me what the exam format is? Anyone?
Yeah, is it that section C has 215 marks, which will be income tax on corporation, and a 10 mark, which could be on any other topic, but it's usually tax planning or IHT or VAT as well. And then section B will have three questions with 10 marks each, so that's another 30 marks, which will usually be CGT, BAT, IHT. In section A will be 15 questions, 30 marks on all topics.
Correct. That is absolutely right, Havish. So let's quickly discuss as whatever Havish has told. Section A and Section B are the tricky areas, because in those you will either have a right answer or a wrong answer. There is no in between, because you will have to choose the correct answer. So let's assume that there are questions that ask you to choose multiple options, and you choose two correct options, and the third one that you have chosen is wrong. You will be losing out on your marks and you will not be scoring that 1 mark also. So whenever you're solving your section A questions or section B, be very thorough and be very accurate in your calculations or the questions that you solve. Okay. And coming to the next part, the section C. Section C has 3 questions. The first question will be for 10 marks, which will only be coming from your tax planning and not from IHT or CGT. That has been the case in the previous attempts as well. Tax planning is where the question will be majorly asking you about, should an individual register his company or should an individual continue as self-employed, and what are the benefits that arise from this or that. Whichever is tax efficient, that is what they should choose. So that is what a question of tax planning will be about. The second question will be about income tax. Income tax would probably, they might ask you about, calculate the taxable income of the individual and then calculate the tax liability for that individual. And 1 or 2 marks would be allocated to identifying the dates or any theoretical concept, where they might ask you what should be the date that an individual should file their taxes, or what are the badges of trade, and questions like these might arise in your income tax. Same thing with corporation tax. Corporation tax, the question will always or usually be about calculate the taxable trading profits or calculate the corporation tax liability for 12 to 13 marks. And the other 2 marks or 3 marks will be asking you about the filing date, or if they have missed the deadline, and what are the payments on accounts, what are the penalties. All these will be part of your 2 to 3 marks in your corporation tax question as well. So let me tell you something. The tax administration part, where they ask you about what are the filing dates, what are the due dates, what are the deadlines, should it be done electronically or in paper format, what is meant by IXBRL. All of these aspects will come up to at least 8 to 9 marks in your examination. So it is very important. Most of the students I know, because they'll be very focused on understanding and solving the questions, they might take a back seat, or they might put it all the theoretical concepts to a backbench and not be focusing on those. But I want you all, it is okay that if you have not focused on those until now, but at least from 21st, in the last week of your preparation, I want you all to focus on that, because by 21st or 22nd, you might be very well and versed with all the concepts, all the numerically applied concepts, like may it be inheritance tax, corporation tax, income tax, whatever it may be. You might already be aware of the concepts, but if you miss out on the theoretical concepts, you might be missing out on 8 to 9 marks, which will be making a difference towards getting that pass mark. All right, make that very, I hope I'm clear until here.
Yes.
So Nakul, there is no PDF that has all the theory concepts, but I have created the tax notes wherein I have mentioned about all the dates and all the penalties and all of those. But for that, the chapters that you have in your study text are very much sufficient. If you study your inheritance income tax and corporation tax administration, those will be very much helpful, because they have everything in detail. You just have to remember them at any cost. Okay. And IXBRL, yes, I'll be explaining that, but in tomorrow's session, in the two, because we'll be discussing that in detail tomorrow in corporate with corporation tax. Okay, all right. Now we'll come on to the most important. I would say do it from Kaplan rather than doing it from Study Hub, because Kaplan is more extensive and the dates and all are given in a very clear manner. So it becomes easy for the students to remember, along with the test your understandings. Okay, more than Study Hub, at least for the theory, that is a tax administration part, I would suggest use the study text. Okay, now the most main reasons that the students fail during their examination was not because that they have not studied enough, or was not because of they have not done the things in a correct manner. It is just because of these 6 reasons. The first is lack of exam practice. How many ever questions you do, how much ever revision you do, if you are not doing it in a timely manner, in a time restricted manner, and not solving your mocks before the examination from the ACCA website, the students tend to fail a lot, because they have not sat in that exam environment to solve the questions, and because of that they tend to fail. So this is one of the very important things. At least before 1 week before the examination, I want all of you to write full-fledged mocks that has section A, section B, and section C, so that you understand what are the areas that are lagging behind in. Is it in application of the concepts, or is it more like in remembering the concepts? If you are not able to apply them correctly, you will be able to identify it and able to change that by solving more and more questions, so that you'll be able to solve them correct during your final examination. Okay, writing at least 3 to 4 marks is a very ideal situation, because there you'll be tested in an overall perspective, like you'll be tested from all the areas. So you will know these are the areas that I'm lacking behind. And suppose, let me tell you my example. At least during my preparation, I felt I was making a lot of mistakes in chargeable gains during the last 1 week when I started writing my mocks. And that is when I started focusing more on chargeable gains so that I can correct myself at least before the examination. But if we feel very confident with whatever we have studied and we don't know how we'll attempt it during the examination, a student might be very well versed with all the concepts, but they have not solved it, they have not solved one mock also. So they will not know that how are they being tested on an overall manner. So for that reason, it is very important to practice as many mocks as possible. I would suggest write at least 3 to 4 mocks. You can get them evaluated by me as well. I will be doing the mock evaluations too. I will be telling you what are the areas you are lagging behind in and what are the areas that you need improvement in. And what can you do to get a to increase your score? If you are towards the 40, 50s to 55s range, I can help you getting to the 65s range. If you are falling behind the spectrum, then I can also help you to get past the 50 mark. All right. Next, as I've already told earlier, not focusing on theory. The theory, most of the students tend to ignore theory, which is not at all correct, because as I told you, the theory will be tested. At least the tax administration part that I'm talking about will be tested for 8 to 9 marks in your examination, and along with that the theoretical aspects in the other concepts will be tested. Like sometimes they might ask you about what are the exempt assets and what are non-exempt assets for chargeable gains. That is technically a theoretical question because there's no solving involved. So those students might be very sure of how to solve that question, how to solve if that comes in a numerical format, but they tend to forget the theoretical aspects of it during the exam attempting the questions. So it is very important, along with solving the questions, the regular revision will help in ensuring that you're good with theory. Okay, that's the same for the minor area. The minor area that I've been talking about so far is about the tax administration. Like I have seen many students who have not touched the tax administration until the very last day, and last day they are like, "Sir, I was not able to attempt those 8 to 10 marks because of which they have fell behind below the 50 mark." All right, so it is very important to do that. Next, coming to the tax rules. Tax is, though it is a numerical subject, it is very content heavy. Because it is very content heavy, it requires immense and regular consistent revision. The more that you revise, the better that you will be at. The more that you revise, the number of questions that you solve, and the more that you understand the concepts better, you will be able to score better during the examination. Okay. This, I think this happens because of transposition. What happens is calculation errors majorly happen because sometimes it might be because adding a wrong sign. So let me just show you in the examination this one. Let's not look at the question for now. Okay, so what happens is you might have taken income tax computation, liability computation, and here you have taken employment income. Okay, employment income is X. From this, you wanted to add back something, but instead of adding it back, you have added a minus symbol. And now what happened? Your calculation has gone to it, has taken a toss. Though your understanding of the concept is correct, that you wanted to add it back, but by mistake, you have deducted it. So these are the errors that usually happen. And the next thing that happens is the students not using the formulas in the Excel worksheet. Like always, when you want to add few things, do not add them on your calculator and write the value here. Instead, use is equal to sum of these lines or is equal to this plus this. So do the calculations using these formula bars rather than calculating it on your calculator and then showing the answer here. Is that clear? Because majorly the students make mistakes in these, though they're very correct, whatever they've understood about the concept is correct and accurate. Small mistakes like these will make you lose your marks, because if you make one small mistake with your calculation, you might lose step marks for that, and your final value that you get will also be wrong, because of which you will be losing at least 2 to 3 marks if you are missing out on the calculations that are having heavy weightage like capital allowances and all of those. Simple, like capital allowances, I have seen many students, they have calculated it accurately right. But instead of deducting the capital allowances, they have just added it back. So because of that, you will be losing out on marks like that, things like that. Okay. Sometimes what they do is everything that they have done until here is correct. Like they have taken the trade income correct, employment income correct, whatever has to be added back correct, whatever has to be deducted also they have shown it to the minus. They have shown the value, saying that less tax relief. They have shown that as less tax relief, so and so amount. But they have not shown used a minus sign here. And towards the end, what they have done is they have taken is equal to sum. They have done this also correct. That they have to use the formula is equal to sum. But the value which was supposed to be negative is at positive value. And because of that, the answer that you got becomes, you'll get a mistake in that. So these are the very common mistakes that I see during evaluations. And I want all of you to avoid such mistakes. Like whenever you know something is to be deducted, always use a minus symbol here in front of the value. And after that, towards the end, you can do the sum, use the sum function. These are very helpful tips that will ensure that the mistakes that you do are reduced. All right, clear until here? Any doubts so far, guys? Okay, let me answer a few of the questions that have come up. Yes. So one more thing, thank you for identifying this. I do not want you guys to practice the past papers on the ACCA practice platform for the previous attempts. Only practice the past papers that are having 25-26 syllabus and not the previous ones, because those have the tax rules that were used in the earlier attempts, and your answers, that though you are answering them correct, the answer that you get might be wrong. So you can be taking the question, and but you'll not be having a key to evaluate our answers with. So do not attempt them. Only attempt the questions that are of FA 2024, or that say 25-26 syllabus. Okay, please ensure this, guys, because you might be very much right with whatever you have studied and whatever you have done, but because the tax rules were different back then, the answers that you get are might turn out to be wrong. So it is important that you do not solve them. You have practice exam 1, practice exam 2, you have the pre-December, you have the pre-March mock, and you have a mock exam. You have 4 mocks directly available there, so I want you to attempt those. All right. And I've pinged what is the reference point that you should look at. It should either be FA 2024, it should either be FA 2024 or 25-26 syllabus. So Nakul, it has not been updated to FA 2025. It has been changed to 25-26. I've taken a look at that. Okay, so don't worry. It will be FA 2024's test only. From the June session, FA 2025 will be applicable, but right now it will be FA 2024 only. Don't worry. Okay. I see another question. Shows out working to be. So I didn't understand your question. I think your number 8726713, because could you help me in understanding your question?
Hello. Yes, sorry
Hi.
for the name.
Yes, sorry, I couldn't get your name from that. Yes, tell me what your question is.
Uh, yes, for when we are inputting our calculation on Excel, do we have to show our calculation? Because when we write on paper, we show our calculation, right? Then we get our result.
So you do not have to show your calculation. Instead, in the same thing, you can calculate it. Say, for example, you're calculating the car's taxable benefit. So it should be, what should it be? It should be list price into the appropriate percentage based on the CO2 emissions, correct?
Correct.
So let's say the list price is 15,000. So show it into is equal to 15%, 15,000 into, and it has only 15 grams of emissions. So it's 15,000 into 50%. If you show it this way, you do not have to write about it. You can literally write car benefit is 2250 because it is anyway shown in the calculation here. You do not have to write about it here and waste your time on that. Okay.
Okay. Yes. Thank you.
All right. So yes, and next coming to the most important thing, not using the tax tables efficiently. Guys, tax, as I've told you, and I will keep repeating this on a regular intervals because tax is very content heavy. There is already a lot to remember. So when you have the advantage, when you have the option to take advantage of tax tables that will help you in not remembering a few things, make use of it as much as possible. Like if we go to the CB platform, you have something known as tax tables. All right. In this, they clearly give you the percentages. Like you do not have to remember all of these. What are the tax rates? How much is the personal allowance? All of these you do not have to remember. You just have to remember how and where to apply these concepts. If you are able to remember those, you will be at a very good spot. All right. You do not have to personally remember each and every value, especially the percentages. Like child benefit, income is between 60,000 to 80,000, the charge is 1%, and over 60,000, it is for every 200 pounds, 1% will be a child benefit charge. It has been provided to you in the examination. When things like these are provided to you in the examination, do not take a lot of stress in remembering these because use your brain cells very much only to focus on things that are not provided to you in the tax tables. Like you do not literally, let me tell you, during my preparation, I did not remember the tax percentages at all. Like I used to always, I made it a practice. Even when I was solving questions in during my practice time, I used to refer to the tax table to look at the percentage. Because sometimes you might be very much right, like you know everything correctly, but you might make a small mistake. Like for dividends, you might have taken the normal rates instead of considering the dividend rates. So looking back at the tax tables will actually help you ensure that whatever values you're taking are perfect and accurate. Okay. Like this will be provided to you in the examination. Car benefit also 51 to 54 grams is 15% is provided to you, but 55 grams is 16% is provided to you. It has been already provided to you. Now, what do you have to remember? If it is over 55 grams, how do we increase it? So for every 5 grams, 1% increases. That is something that you should be remembering. Instead of remembering this, if you can just remember that, you can do this plus that. All right, you're getting my point? Using the tax tables as much as possible will really help with your examination preparation because it helps you to not remember a few things and ensure those whatever that has been not being remembered, you can ensure that can be used to remember very important things that are not provided to you in the tax tables. For your reference, I can share once we are done with the session. I'll be sharing this with you guys, which is a tax table, so you do not always have to refer back to it in the CB platform. So I'll be sharing it with you. Whenever you are solving questions, you can always take a look at this and solve your questions. Okay. Clear on that? Use the tax tables as much as possible. They are really very helpful to you guys. Okay, so towards the end of this session, in the WhatsApp group that I've created, I will be sharing you a list of questions of section A's and section B's and section C questions, and I'll also be sharing the pocket notes that we have created at Being ACCA. Okay, so you can always use these to practice better and improve your preparation levels along with the last the feedbacks and everything that support that I'll be providing to you until the very last day. All right, clear on this, guys? Any doubts so far? Are we good until here? Any, are you facing any issues?
No.
So Nakul, along with the mocks that are there on the practice platform, there are a few mocks in your Kaplan and BPP kits as well. In the last, if you go towards the very end, you will find a few mocks there as well. You can use those for your practice. Okay. Yes. So coming to our agenda for the day. In today's session, we will be discussing and we will be revising, we'll be having a quick revision for the entire income tax and NIC revision. And with that, as we have seen the CV platform, we will be solving the question 2 as well of the past paper, which is a September and December past paper. Along with that, I think we have already completed the structure explanations and the common mistakes. So, shall we jump to the revision, guys? Do you guys have any things in your mind so far that you are having any doubts with until whatever you have discussed and not the concepts? Okay. So from now on, I think I will want you to if you're having any doubts about the concepts, we can be discussing those, but we will be having a quick revision of all our concepts in the income tax and income tax liability. Okay. So first, before we move to the revision part of it, can anyone tell me what is meant by income tax? Like this is a basic of the basic questions that I want you guys to tell me about. What is meant by income tax? And I want this answer from you guys. I will not be answering this question at all. All right. So anyone please answer. I do not want silences. Tax payable on the income of individuals. Absolutely right, Nafa. It is nothing but any individual on whatever earnings that they earn. Government will levy a tax on them, and that is known as income tax. Okay, so clear. And what government, since we are studying UK tax, always remember, since it is UK tax, it is about the individuals who are the residents of UK. Any individual residing who is a resident of UK and the income that they earn, they will be levied tax on. This is known as income tax. I think, is this clear for everyone? Yes, no, maybe? Can I get a thumbs up, guys? I can only see one. What about the others? Okay. Yes. So now let's move on to understanding income tax. In income tax, always remember it's easier to remember things in a this manner. First is the individual, a resident of UK. This is the first question that a first question. Okay. The second question will always be about what are the different types of income that an individual has. And coming to the third question, it will be about how is the income tax liability computed. Is this clear, guys? Always, whenever you're calculating income tax, this is the flow that I've been talking about earlier. Consider it similar to a storyline. First, what will happen if a person is considered as a resident of UK? That is when income tax will be charged. So that is the first step that we should identify. The individual is actually resident of the UK or not. Next, because an individual can have multiple types of income, and because of those multiple types of income, all of those clubbed together is what on which you're getting a taxable income, and on that you will be getting your income tax liability, which is our second question. What are the different types of income that an individual has? Because all of those should be added together in order to get our total taxable income. Okay, this is the second and very important question. Because if you miss out on identifying or considering at least one source of income, your total taxable income is wrong, your income tax liability computation goes wrong. All right. Next, we move to the third question, which is how is the income tax liability computed? Income tax liability will be computed using the tax rules that are available. So, we will be moving to that once we discuss the types of income. And first, once we'll resolve the first question, then we'll go to the second question, and then we will be discussing the third question. All right. This is the structure that I've been talking about and the hierarchy of remembering things earlier. Is that clear now? Guys, and are you guys able to follow me, or are you guys facing any issues with how I'm explaining things? Because if you're facing any issues, I think we can correct those along the way as well. Is everything clear so far? Are you guys having any issues? Okay. Yes. Now let's consider, is individual a resident of a UK? Every person who goes to UK, will they be considered a resident of the UK?
No.
Correct. No. So how do we identify on which individuals who come to UK and what incomes that they have should they be considered a resident of the UK so that their income can be taxed upon? That is what we'll be discussing first. So for that, there are a few tests that have been designed by HMRC, which is an apex body that does the tax calculation. All right. Like how we have income tax department in India, is similar to that is what HMRC does for the UK. All right. So first is nothing but how do you identify a non-UK resident? So someone who comes to the UK, every person is not a resident. So what are the few tests that can be done in order to consider that person is never a UK resident? One is that if a person has stayed in UK for 16 days or less, if that person has stayed for less than 16 days, they will automatically not be considered a resident. Clear on this? Next, if a person has stayed in UK for more than 16 days, but has stayed for 46 days or less, but in the prior 3 years, that person was never a resident of the UK. So the tax residency will always be evaluated on a yearly basis. Every year you will have to evaluate if an individual is eligible for tax liability in UK or not. Okay. So if the person was not a resident of UK in the prior 3 years and he has stayed in the country for 46 days or less, then he is automatically a non-UK resident. So any income that he gets will not be part of your taxable income. Clear? Or will not be charged for income tax computation. Okay? Yes, no, maybe. This is done. And the third test. The third test is nothing but an individual has stayed for more than 46 days, but he has stayed for 91 days or less. Though he has stayed in more than 46 days, he stayed in that country for 91 days or less. But he works full time overseas. That means he has a full time employment overseas. That individual will also not be considered as a UK resident. Okay? They'll have to be working full-time overseas. Now we have identified all the tests in order to consider an individual to be a UK resident or not. Okay. Now we have eliminated the non-UK residents. Now we'll come to identify who are the ones who are automatically the UK residents. What are the automatically UK resident tests? One is that they must have stayed in the country or they must have stayed in the UK for 183 days or more, which is equivalent to half the year. That means they have spent at least 6 months in the UK. If they have spent 6 months or more in UK, then they will automatically be considered as a resident of the UK. This rule is pretty straightforward. Clear on this? Yes. And the next one, The next one, when do you consider an individual not to be an automatically a resident of UK? When they have a house, but it is an only house in UK. They do not have any other houses in any other countries, but have their only house in UK. Then they're automatically considered to be a resident. In this one, we have seen that if an individual is working full time overseas, they will be considered as a non UK resident. But if they work full time in the UK, then it is very evident that they are automatically UK residents. Okay, the residency status has been clear from this point. Any doubt so far? Great. Now, from both these tests, we have directly eliminated either a non UK resident or a UK resident. So it has been black and white so far. It is either this or that. But there might be situations where you might not be able to evaluate if the person is actually a UK resident or not. So for that reason, we have something called sufficient ties test. Sufficient ties test is nothing but, so if you're not able to evaluate if a person is a non-UK resident or a UK resident, then you'll be checking these and the number of days that they have stayed in the UK in order to evaluate their residency status. Okay. So what are the sufficient ties tests? The first is family. Whenever an individual has a close family member in the UK, that is considered as satisfying one of the ties. Guys, always remember, close family for taxation purposes will only mean either spouse or kids and no one else. You can never tell, let's say, grandparents, uncles and aunts and all of those will not be considered as your close family. Yes, spouses or civil partners. Yes. Sorry for that, but yeah, it is spouses and civil partners. Okay. Next is accommodation. Here, what did we see? If they have an only house in UK, then they're automatically a resident. But if they have a house in UK, it is not only house, but a house. A person has multiple houses, and out of those, one of the house happens to be in the UK. Then that is also satisfying one of the ties. Clear? Now, coming to the third thing, does substantive work in UK? In this one, what did we see? If they work full time in the UK, they're considered automatically a resident. But if they work for majority portion or substantive portion cannot be defined in a quantitative manner. Remember that. But from the question, you will be able to identify that he does substantive work in the UK. Every time they talk about substantive work, it will not be quantitatively measured in the exam questions as well. Okay. They'll be using substantive or most of the work or words like those. All right. Then it is satisfying one of the ties. Next, fourth thing is days in UK. Has spent more than 90 days in UK in either or both of the previous two tax years. So if an individual has spent either in the prior year or in the prior 2 years put together, or just in the one of the 2 years, like he did not stay in 2025 but he has stayed in 2024, then this tie is considered to be satisfied. But remember, this tie is not applicable to the people who are coming to the UK for the first time. Always remember that, not applicable to the students who come to the individuals who come to UK for the first time. Hope this is clear. Next is spends more time in UK than any other country. Consider that person to be a global nomad who likes to travel around the world. So what happens? He spends 40 days in Norway, 30 days in France, 60 days in India, and rest of the other time he has stayed in UK. So what is happening? 40 plus 60 plus 30 is 130 days. But out of the 365 days, the other in the 365 days, other than those 130 days, he's staying in UK. So isn't it happening to be most of the days in the UK? So isn't he staying in UK for 235 days, while in the other countries he has only stayed for 60, 40s, and 30 days?
Yes.
So that means he's satisfying this tie as well. He or she is satisfying this tie or test. Okay. So Once you remember the ties, this is all you will have to remember to consider an individual is resident or not. You do not have to remember how many ties should an individual satisfy, because it will be provided to you in the examination. If you look at this, you can see if he is less than 16 days, automatically not a resident, not previously, automatically not a resident. If it is 16 to 45 days, if an individual has stayed within 16 to 45 days, then if they are previously resident, then they'll have to satisfy 4 UK ties or more. Okay, then it is 46 to 90 days. You will have to satisfy 3 ties if it is if they are previously resident, and if they are not previously resident, 4 UK ties. You will just have to remember what the ties are. You do not have to remember how many ties are to be satisfied. Okay, is that clear until here? Any doubts so far, guys? That is great. I think there's one question that I'll take up. But some tax admin part is not given, like the percentage. Yes, so that's what I'm telling. Not telling this is an extensive list that everything will be provided, Nakul, but whatever has been provided in this, you do not have to remember those things. That is what I meant to say. Okay. Everything will not be provided. Obviously, if everything is provided, then it makes our job very easy in preparation, but which is not always the case. So whatever has been provided to us, we will ensure that we do not have to remember those, because I remember, if you remember how many ties, 4 ties, 3 ties, and all of these, it might get confusing. Like you might be missing out on days, or you might be like, okay, if it is 16 to 90 days, I'm saying this is a very common mistake, and I have seen that they might be like, okay, I thought it was 16 to 90 days, sir. That's why I thought it was 4 ties to be satisfied. But the person was satisfying only 3 ties, so I considered them not a resident, which makes it a mistake, because 46 to 90 days, it requires only 3 ties. So mistakes like these are very much common. So because of such mistakes, it is always good to refer back to these questions. It will help you a lot better. All right. Now, have we solved the first question, guys? The first question that we have been discussing about? Well, if the individual is resident of the UK or not? Have we discussed on that? Everyone is clear about it?
Yes.
Now, let's move on to the second question, that is, what are the different types of income that an individual has? Always, this is the order of priority. Whenever you have these are the different types of income that you will be tested on. One will be your property income. Next is your employment income. After that, it's pensions. Income from self employment also includes partnerships, because that is also a type of self employment only. And because when you're discussing about income from self employment, you will also be discussing about capital allowances. Once you finish all these types of income, that is when you will be tested on trading losses for individuals. All these incomes form part of your non-savings income, and that is why non-savings income is very extensive and many things to remember. And after that, savings income will be pretty straightforward. It's just that the tax rules are a bit different, because you have nil rate band and all of those. But a lot more effort is to be put into remembering all the tax rules relating to the non-savings income. If Let me tell you something, if you're thorough with this, 40% of your exam preparation is done. Because if you are very much thorough with income tax, then from income from self-employment and capital allowances, if you are thorough with this concept, your corporation tax preparation becomes at least 70 to 75% easier, because the rules and everything are very much similar. You will just have to identify what are the differences between income tax and corporation tax, but other than that, the rules are very much similar. Okay. Your 40% of your entire syllabus revolves around income tax. You're thorough with this, you're thorough with everything. Okay. So I couldn't understand this question. Can you repeat that, Nakul? What is if both non-resident test and resident test is met, then what to follow? How can a person be considered as a non-resident and resident test? Can you explain that to me? It'll either be this or that. Okay. Always first test will always be a non-UK residency test. You'll identify if the person is a UK resident or not. Once you're done with that, then you will move on to evaluate if the person is a UK resident or not. Alright, it will either be this or that. Clear on that? Now, shall we get into the details of each and every type of income? We'll discuss about property income, employment income, pensions, income from self-employment and capital allowances, and then trading losses. Okay? Any doubts until here, guys? So far, everything is okay? Any doubts so far? Okay, great. Now let's start off with understanding property income better. In property income, always remember the basis will always be cash basis. It is the default. Cash basis will always be the default basis. So whenever you're calculating the property income, it will always be calculated as rent received less allowable expenditure. Okay? Always remember, any allowable expenditure is nothing but expenditure that has been incurred in providing the property, like any expenditure incurred to show the property to an individual or things like that, or any costs of maintenance, maintaining the property, and all of those will be considered as your allowable expenditure. Okay, rent property income is always considered as a very straightforward concept because it will always be how much ever rent you have received minus any of the allowable costs. But there is one small thing that you will have to remember, which we'll be discussing later as well. If you have any mortgage on the property that you're lending out, it is not an allowable expenditure. It's not an allowable expenditure, but you will get tax relief for it. Okay. So let's say, for example, you have a property that you have lent out. You have taken a property on loan. You have bought a property by taking a loan out. So you'll have to pay the mortgage interest on it. So how much ever interest that you have to pay should not be shown as a part of allowable expenditure. But after calculating your total income tax liability, is X. Let's say it's X. From that, you deduct less mortgage interest into 20%. Whatever your tax rate or tax band be, mortgage interest will always be reduced at 20% only. Is this clear? Clear on this, guys?
Yes.
This is one of the concept many of the students miss out, and I would want everyone to be very thorough in remembering this, because if you miss out on this, your property income will be wrong, and because of that, the final answer that you get will also be wrong. Okay. Mortgage interest should always be considered as a tax deductible and not a part of your allowable expenditure. Cool. In property income, the other things that you will be considering are, once we have furnished holiday lettings. Can anyone explain to me what a furnished holiday letting is?
There are houses which should be furnished and they should be lent on a commercial basis.
Correct. So any property that is furnished and lent out on a commercial basis, that is called a furnished holiday letting. But what happens to, what are the other conditions to be satisfied for a furnished holiday setting, furnished holiday letting? It is that that property should be let out for at least 10 days. This is also an important consideration that should be taken. Okay, always remember that any property is considered to be furnished holiday letting if in a tax year it is always let out for 210 days. Okay, and and the next condition is, and the property should actually be occupied for 105 days in the tax year. Okay, clear on that, guys? Any doubts on these so far? So furnished holiday, what is an advantage that you get? That if there is any furniture that you have, and you have purchased some furniture, that will be considered as an allowable expenditure, which is not the case when it is a normal property. Okay, any normal property you let out, if you have provided any furniture, if you are incurring any cost in order to provide furniture, that will not be an allowable expenditure. But if it is a furnished holiday letting, it is an allowable expenditure. The best example for furnished holiday letting will always be Airbnbs. Okay, if you go to an Airbnb, you know that you'll find everything that you have in a house. Is that not furnished? Yes. Yes, no, maybe. Great. Guys, I wanted to respond better so that we can make this session as interactive as possible. Okay. You can give a thumbs up, you can raise your hands if you're having any doubts and whatever. I will be there. I'll ensure that everything is being acknowledged. Clear? Then coming to the third and important aspect of property income. Always remember these three are the things that you will have to remember when it comes to property income. One is how do you calculate the property income? Next is furnished holiday lettings, and third is rent a room relief. Rent a room relief is nothing but there is a property that you own in which you're letting out only one room out of the property. So in that case, what happens is you have something known as rent a room relief. So how do we normally calculate property income? It will always be rent received less allowable expenditure, correct? But in rent a room relief, you have a relief known as 7,500. 7,500, which will also be provided to you in the tax tables. If you can see, rent a room relief limit is 7,500. So that means if your rent is, say, let's say it is 10,000 and your allowable expenditure is 4,000. So now your property income is coming up to 6,000, correct? But if you use rent a room relief because of 6,000, what will happen? Your total income will increase. From that, your income tax liability will increase. Am I not right? Correct?
Yes.
But using rent a room relief, what will happen? It will be, instead of 4,000, you have an option to take minus 7,500 directly, which is bringing your property income down to 2,500. Because of that, 4,500 has been reduced. Correct? From your total income, 4,500 has been reduced. That means the amount of tax liability that you pay is also going down. Yes, exactly. So always in rent a room relief, they'll always be asking you choose whatever is beneficial. Now this is one of the scenarios. Now let's assume if the expenditure incurred was 8,000 or 8,500. Now 8,500, okay. It's coming down to 15. Now, what do you think an individual should choose? Should they choose rent a room relief of 7,500, or should they calculate it normally as allowable expenditure?
Normally.
Normally, correct. That is always an option that a person has. It is not mandatory to be using only the 7,500 rule. In the question also, they will say use whatever is the most beneficial. That is a very key word. Whenever they say that use the most beneficial one, always use calculate it in both the manners. It should be rent minus allowable expenditure and rent received minus 7,500. Whichever comes out to be most beneficial, that is what is to be taken into consideration. Okay. Now, the other important thing in property income is because it is cash basis, here whatever we take should only be rent received and not receivable. How much ever has the rent been received in the tax year of 6th April to 5th April 2024 to 5th April 2025, that should only be considered. Though you know, though you are supposed to receive 10 months rent, but in cash you have only received 9 months rent, only that rent will be considered as a part of your as a part of your rental income. Okay. Any doubts until here, guys, so far? Yes, Nakul. I can read that FHL consecutive letting is also there. Yes. So consecutive letting is nothing but furnished holiday letting. Those are the rules that we have discussed about the individual that is staying there. But what is consecutive letting? If one person is actually taking the property on rent, okay, a person wants to stay in that property, and a person should not stay for more than 31 days. And so if a person is staying for more than 31 days, that will not be considered as a furnished holiday letting. If they stay on a consecutive terms, that they stay for 5 months completely together, like 31 days in each month, and they're staying for 155 days in the tax year, then it will no longer be considered as a furnished holiday letting. But I don't think that is a very important rule, because it is important to identify what all are the conditions that are to be satisfied in order to meet the furnished holiday letting rules. Okay. This is about if a property is considered as a furnished holiday letting or not. Yes. Now, we have discussed it should only be considered about whatever the rent has been received. Guys, in the examination, be very careful. If the word is you might be reading rent and you might be using that value of. It is important that you see if it is rent received or rent receivable. These play are the two important words. If you mistake received as receivable, then you will be getting your property income and calculated in a wrong manner. Okay, clear on that? Any doubts so far? Now we have identified the cash basis to be the default basis. But when will an individual have to calculate it using accrual basis? If the individuals if the individuals rent receipts are exceeding 150,000 pounds, then they should switch to accrual basis. Is this clear? It is not the property income that is exceeding 150,000, but it is the rent receipts that are exceeding 150,000. Okay. Then if we are going to accrual basis, then what will happen is here we have been taking received, correct? How much ever that has been received is only being considered as a part of your property income. But here you can take rent receivable less expense payable. Yes, mortgage is like interest paid from property only. That is exact. Both are equally used. It can either be this or that. Both will be the tax reducers. Yes. Okay, clear on this concept as well? When do you have to use accrual basis and when do you have to use cash basis? Is everyone understanding the concepts clearly, or do you think you're facing any issues, or do you want like a 5 minute breather so that we can get back and resume the other areas? We can do that as well. Do you guys want me to continue, or do you guys want to break for 5 minutes? Okay, I'm getting continue. Great. Let's continue to the next topic. With this, we have completed income tax. Sorry, property income. Correct? Any doubts in property income so far? Everything is clear? Is everything clear, guys? Great. Next, let's move on to employment income. Employment income is the most and very content heavy concept because there's a lot of things to remember. You'll have to remember what all are the exempt benefits. Yes, in commercial letting, that will be interest paid will be deducted from the format itself. Correct. Okay, next is employment income. In employment income, it is very important to remember a lot of tax rules. So, guys, employment income, remembering a lot of things is important, and income from self-employment, solving a lot of questions is important. So do these in a very consistent and regular manner because the exempt benefits that are there in employment income is a very vast and extensive list. So I myself, whenever we are considering discussing the topic, we will be not discussing all the exempt benefits and all the taxable benefits, but we will be covering the top and more important areas. Okay, because the list is very extensive, it might not be covered within the time frame that we have got. But if you guys have any doubts in any of the exempt benefits or taxable benefits, you can always reach out to me. This PowerPoint will also be provided to you in the group, so my contact details will be available and you can reach out to me whenever you want. Okay. Yes. Now let's go to employment income. Again, always remember, for individuals income tax, employment income or income from self-employment or pensions, anything will only be cash basis. Clear? So whenever we talk about employment income, it will always have salaries or wages plus any taxable benefits. Let me change this from plus to add. Benefits less any deductions. Okay, so in this, it is important to remember these three concepts. One is salaries or wages, and it will include any bonuses that have been received. Again, remember, it is only the salaries or wages that have been received in the current year and not receivable. So if you have worked in that company for 12 months, but you have received salary for only 11 months and the 12th month salary has not been received as yet, then you will be calculating your income tax only on those 11 months income and not the 12-month one. Is that clear? The same thing goes on for bonus as well. Bonus also, though the bonus that you will have to receive has been declared, but it has not been provided to you, then you will not be considering that bonus. There are two things in the bonus. It should be remembering that one is bonus has been declared. Bonus has been declared. Bonus
So,
has been
sir, is it safe to say that?
entitled. Entitled. Sorry, how is?
So I was asking, is it safe to say that employment income is cash basis just as property income? It's what you receive, not what is due to you?
Yes, always it is not what it is due to you. It is always what you're entitled when you're entitled to it. Okay, that's what I'm explaining over here. Has been declared, bonus has been entitled, and bonus has been received. Always these are the three dates. Let's take bonus has been declared in December. Okay, you have been entitled for this in March. You have received this in April. This is not only for bonus, guys, this is also for salaries and wages and all of those. Okay. When bonus has been declared in December, do you think it should be part of your income as yet? In December income, in as a part of your December's monthly income, do you include bonus? It has just been declared that you will be getting this much bonus in this year. Yes, no, maybe. I got one no. What about the rest? If it is a no, give a thumbs down. Otherwise, you can answer it on the chat as well. If it is yes, give me a thumbs up. Should we add it or no? I am coming to that point, Nakul. That is the next point that I'll be coming to. Okay. As we all know, okay, let me add the dates as well. So for everyone's clear reference, you have been entitled to it on March 31st and you have received it on April 17th. Okay. What is our tax year? 6th April to 5th April. Correct? 6th April to 5th April. So are we receiving the bonus before the year end or after the year end?
After.
After the year end. So according to cash basis, what is it? Because we are receiving it after the year end, we should not be considering that. Is that not what we have studied so far?
Yes.
Yes. But over here, the important thing to remember is when it should be the earliest of when you are entitled to it and when you have received it. Now, the individual has been entitled to the bonus on March 31st, but he has actually received it on April 17th. Okay, so now since it is March 31st, it should be earlier of entitled date and the received date. Is the earlier date of March 31st not falling within the tax year?
It is.
Since it is falling in the tax year, we should be considering we should be considering it as a part of our taxable income. Okay. And the date of receipt should be remembered in a very important and clear distinction should be made. In the examination, things like these play a very vital role. Okay, all right, clear on this? Any doubts so far about until here, guys? I see no thumbs ups coming out. I am waiting for the others to respond as well. Is everyone clear? Okay, I see a few now. All right. So now it is always about salaries and wages, add taxable benefits, less deductions. Whenever we come to deductions, deductions are nothing but are expenses that are incurred to perform the office duties. Okay. So let's say you're an ACCA member or an affiliate because you're working as an auditor for a firm. What the prerequisite for an auditor is that they should be part of any chartered body, correct? Is that not a prerequisite for any auditor? So being a part of CA, being a part of ACCA or ICAI for that matter in India, is it not important to perform your duties? It is. Since because it is, and for that you will have to pay your annual subscription fees. And that annual subscription fees, why are you paying that? Because you can be a member so that you can perform the duties. So, or you can understand the chain there. So for that reason, any expenditure that is incurred wholly and exclusively for the purpose of performing your duties will be considered as a deductible expenditure. All right, clear on that? Okay, great. Now we have taxable benefits. Taxable benefits, in that we have classifications, the total benefits along with your salary and bonus. You also get a few perks from the management from the management or employer. These are considered to be benefits. Considered to be benefits, and they become, and some are classified. They are again classified. How are they classified? First will be your taxable benefits. Next will be your second is your exempt benefits. Guys, let me tell you, exempt benefits, the list is very extensive. You will not be able to remember all of those unless and until you do your regular and thorough revision. Okay, even if you do that, you might be missing out on one or two, but if you see all the questions, you might be able to identify few things that are regularly tested, and it is important that you pay attention to those and revise those on a regular basis. Okay, hope that is clear. Anyone has any doubt so far? Clear. Okay, now first let's discuss a few of the exempt benefits that are majorly tested. Okay, few of the exempt benefits that are majorly tested, one of them is long service awards. Long service awards is nothing but if an individual has worked with a company for a long time. Okay, an individual has worked with a company for a long period of time, say for 20 years, and because of that they always get some kind of mementos, or they can get any memoirs sort of things from the office. So whenever they get something like that, for each year of their service, 50 pounds is allowable expenditure. 50 pounds. Okay, cost of 50 is an allowable expenditure. If they exceed that, it becomes taxable for each year. Let's say they have worked for 20 years in that company. 50 into 20, the cost of the gift cannot exceed £1,000. If it exceeds £1,000, the gift becomes taxable benefit. Otherwise, if it is 1250, it becomes taxable. If it is 1,000, it becomes exempt. Okay, that is one of the exemption. And if any of the facilities are provided to all the employees and not to one particular employee, let's say the office has a crèche facility, or a gym facility which is accessible to all the employees, then that will be exempted all the time. Okay, all of those exempt will be exempted. Third, that we should important be discussing is relocation expenses. Location expenses. If the individual is being asked to move to different places to satisfy to perform their work. Okay, let's say I am from Hyderabad and I am moving to Delhi to do my job. So for that, my company has provided me around £8,000. Let's say we'll be discussing this £8,000. It is an exempt benefit. Relocation expenses up to £8,000 is exempted. Exempted. If it exceeds £8,000, the excess becomes taxable. Okay, clear on that? Next is a job related accommodation. Job related accommodation is nothing but if any accommodation is provided to the employee in order to better perform their tasks or their works, or in order to to provide security for the employee, that is considered as a job related accommodation, and how much ever the accommodation costs, it is considered to be completely exempted. Okay, it is not a taxable benefit if it is job related, and this is also something many of the students miss out on. If an accommodation, in order to identify it, it should be for the purpose of satisfying their duties, and if it is for the protection and safety of the employee. That is what is a job-related accommodation. So ensure that you remember that and identify it from the if they tell you it is job related accommodation, do not go into the calculation of how the accommodation benefit, but evaluate if it is job related or not. If it is job related, then it is exempt, then you show it as zero. If it is not job related, then you calculate the taxable benefit and show it as a part of your employment income. Clear? Okay. Now, so these are a few things that we have discussed, and others we have like beneficial loan. If the loan is less than £10,000, it is completely exempted. Any one mobile phone that is provided is exempted, but the second mobile phone becomes taxable. And if you're moving to different cities for work, not moving to different cities, but traveling for work to different cities within the UK, £5 per day is exempted, and £10 if you're going overseas is exempted. The list is very extensive, guys. So I've discussed some of the important things. Okay. Clear on that? Next, let's move on to discuss the taxable benefits. In taxable benefits, first and foremost important thing would be accommodation. Accommodation is, here it has been discussed job related. Now we are discussing about non-job related accommodation. Job related accommodation. Can anyone explain to me how do you calculate the taxable benefit of non-job related accommodation? Anyone? Annual value. Can anyone tell me? Annual value additional charge. Yeah. Can you tell me first annual value? So always remember job related accommodation will be first is it's not just annual value, it is higher of annual value or rent paid by the employer. Always remember this. Okay. And if the annual value exceeds 75,000, then an additional benefit arises. Additional benefit arises. And how do we calculate that? It is nothing but annual value minus 75,000 into interest rate. How interest rate? Which interest rate do you use? It will be provided to you in the tax tables. Official rate of interest. This is the interest rate that you should be using. The 2.25%. Okay. Into interest rate, which is 2.25%. Clear? The additional charge arises when the annual value exceeds 75,000. It is always the normal charge will not arise based on annual value, but additional charge arises if the annual value exceeds 75,000. Okay. Is that clear, Nakul? Yes. So that is one of the benefit. Next and most important thing again, that is very vastly tested is your car benefit. Car benefit will always be based on, remember this, it will be based on list price. These are the factors to be considered. List price, the appropriate percentage, and total months in the tax year that the car was provided. It actually, let me tell you something. This rule is applicable to all the taxable benefits. Number of months provided. Any taxable benefit only arises for the months that it was not that it was provided for and not for the entire tax year. For example, if any property accommodation was provided to an employee only for 5 months, then the taxable benefit arises for those 5 months only. And the same thing goes with car. If a car is provided for only 5 months, then it will be list price into percentage into 5 by 12. Is this clear, guys?
Yes.
It should be prorated accordingly. Any taxable benefit should be prorated accordingly. Okay? These are the two things to remember. Now, what is list price? List price will always be mentioned to you in the examination. You do not have to worry about that. But if in addition to list price, they say that the company has also paid for road tax, insurance, and all of those, as we have discussed in the beginning of the session, those should be considered, those should not be considered at all. It is only the list price that we will be taking into consideration at all time. Okay. Yes, accessories fitted is again completely separate. I'm talking about road tax and insurance and all of those, Nakul. I'll be getting to that. Don't worry at all. Okay. I will be discussing that first. It's important to understand the generic concept, then we can get to the details. Okay. Yes. So what list price will not include road tax, insurance, or anything, but it will include if any additional fittings have been included, like they've added CarPlay to your car or any new additional features have been added to the car, then that becomes that will be added to the list price. That plus additional fittings will be added to the car. Okay. So always remember, first it should always be list price is the first consideration, then additional fittings if they provide to you in in 90 cases of the questions that you see, 75 cases will only be talking about the list price, and to confuse you in those 15 other times is where you will be provided with accessories fitted and all max and all of those, but otherwise it will only be list price. Okay, these are the two things to remember. Now, for any of the taxable benefits, if along with the taxable benefit, an employee is like they will contribute to it, then how much ever the employee contributes is reduced from the taxable benefit. Is this point clear to everyone? Did you understand this point? If and you are provided with any benefit that is a taxable benefit, and let's say the cost of it is coming up to 8,000, but in that, for suppose you have paid like, okay, you are like 8,000 is a burden on the employer, I will take up 3,000 of that cost, then what will happen? Your taxable benefit will only be 5,000, and not 8,000. Okay, clear on that? Because it is 8,000 minus 3,000. Clear on this point? A taxable benefit is calculated after deducting whatever employees' contributions are for that benefit being provided to that individual. Okay? Clear so far, guys? Any doubts until here? Okay, great. Now, we have seen that for taxable benefit and that they contribute, it will be reduced. How much ever they contribute will be reduced. But when we come to cars, there is a small exception for this. the employees' contributions are deductible only up to 5,000, irrespective of how much ever they contribute. Though they contribute 10,000, employees' contribution is deductible only up to 5,000 pounds and not more than that. Is that clear? So, considering the rules like this, everything has one or the other exception, and it is important to remember all those exceptions. Considering all the exceptions, that is when you will be able to calculate your taxable benefits. So, the general rule for any taxable benefit is calculating the taxable benefit after deducting the employees contribution and then prorating it to the number of months the benefit was provided to the employee. The benefit was provided to the employee. I will be talking about pension scheme when we come to it, Mitushi, but if you want to know about if there are any pension contributions that an employee makes, if an employee makes, so employers usually have pension, pension plans where they ask the employees to contribute, and they will be contributing, the employer will also contribute an equivalent amount. That is a usual scenario. In India, we have something known as provident fund. Okay, that goes into the pen. That's also similar to pension scheme. So what happens in that is employees contributions are deducted from the employment income. Okay, but employers contributions are exempted. Okay, always remember, employers contributions to the pension scheme is always an exempted benefit and not a taxable benefit. We will be discussing this again in pensions as well, but I hope this is clear. Uh, Now, coming to the exam perspective for employment income. In employment income, if you are having multiple many benefits that are provided to the employee, if any taxable benefit is given, we have to calculate it and present it. Calculate and present it. But if there is any exempt benefit provided, then you should show it in the examination with a 0 with it. And that is when you will be getting 0.5 marks. Otherwise, though your final answer is correct, you will not be scoring full marks because for this exempt benefits, you have not shown it with a 0. Okay? Clear on that, guys? All the exempt benefits, all the disallowed expenditure in self-trading, you should show them with 0. And if your any accrual basis is there in self-employment and you're calculating it normally. So what happens? Allowable expenditure should be 0, disallowed expenditure should be added back, correct? So allowable expenditure, it is correct. It is actually taken into profit calculation, but you did not mark a 0 beside it. By presenting it as a separate line item in the exam presentation, you will be missing out on these 0.5 marks. I will show you an example for that. If you see in the question as well, it says indicating by use of 0 for any items which do not impact your computation. It will be clearly mentioned, which means if you miss out on taking that into consideration, you will lose out on your half a mark. And each half a mark, there might be at least 2 to 3 that are exempted or are allowable and things like that. Because of that, you might be losing out on at least 1.5 mark without making any mistakes. Your entire calculation is correct, but because you missed out on showing that, you'll be missing out on those 1.5 marks. Okay. So the way you present things in the examination also plays a very crucial and key role. Clear on this, guys? Yes, no, maybe? Great. Now, since we have discussed whatever we discussed so far, we have completed property income, we have completed employment income. Now, let's move on to pensions. In pensions, there are two types. Pensions, two types. Can anyone tell me what are the two types of pensions? Anyone?
Personal pensions and the one provided by your employer.
Correct. So as it been mentioned, it is personal pension scheme. One is personal pension scheme. Next is occupational pension scheme. Occupational pension scheme. Okay. Now let's talk about personal pension scheme first. Then we'll move on to occupational pension scheme. Personal pension scheme. Whenever you make any contributions to a personal pension scheme, like you might have any funds, mutual fund, which are into pension savings and all of those contributions will not be deducted from your total income. But what will happen is, first is, how much ever you contribute, that will only be 80%. Okay, let's take, sorry for the small spelling errors, guys. Let's take, you have made a contribution of £5,000 into a personal pension scheme. Now, what will happen? The HMRC, the first benefit that you get will, the HMRC will provide an additional 20% benefit. They will provide additional, contribute additional 20% to it, and it will gross up your personal pension scheme into 100 by 80. So your gross pension contribution will be 6,250. Okay. Whatever you contribute, how much ever you contribute, you will be contributing only 5. That and 20% will be contributed by HMRC, making your total contribution to be £6,250 in this example. Is that clear? This is a first benefit that they get. Now, the second benefit that you get because of personal pension contributions is, whatever your personal pension contribution gross amount is, this is your net amount, this is your gross amount. This gross amount will be added to your rate bands. Okay, what are the rate bands? First, we know it is 0 to 37,700 at 20%, correct? But this, what will happen? It will be 37,700 plus 6,250. So now it will be until 43,950. It will be taxed at 20%. Okay, you can see the tax rates here. So until 37,700, it was 20%. Now what is happening? Our basic tax rate band from 37,750 has increased to 43,950. Correct? In the same way, it will also increase our higher rate band 125, 140 plus 6,250 will be taxed at 40%. Clear? So this is an additional tax benefit that arises because of personal pension contributions. Is everyone clear with this concept so far? Here we are talking about contributions, guys. We are not talking about pension as an income for us. Okay. Any doubts on this personal pension scheme so far? You understood the concept of grossing up and all of that? Are you guys having any issues so far? Okay, I see Mitoshi, Nafa, and no one else. Are the others confused? Are you guys okay with the concept so far? Is it everything clear? As my understanding, am I able to explain things better, guys? If not, you can also tell me that. That is also not an issue. I can go slow or fast, whatever works for you. Yes. So remembering is always the issue, guys. As you have seen in the email that I've sent out as well, it always make a note of the things that I keep telling in the session, because we are covering all the vast areas on a vast length. So though we might be not discussing everything in detail, whatever is being discussed is very, very important and it will be tested on a regular basis. Okay, so please make a note of everything that we do, and I'll also be sharing this Excel sheet with everyone on the so that for your reference. Okay. Yes. Now let's move on to the second thing, which is occupational pension scheme. Occupational pension scheme has two things. One, we have already discussed this. I'm just putting it out here so that one is employees contribution and the other is employers contribution. Employees contribution, always remember it is deductible. Like when you're calculating employment income, whatever the employer has calculated, it is deductible. Whatever the employer has contributed, that will become an exempt benefit for the employee, but for the employer they can show it as a deduction. Clear? When you're calculating self-employment and employer's contribution is there, you can show it as a deduction there, but here it is an exempt benefit. Okay, think of it from two sides. One, employee is getting the pension contribution from the employer, so what is happening? Is he being taxed on it? No, he's not. Next, the employer who is self-employed, or is it a company or a company, how much our employer has contributed to to individuals pension schemes, that will be a deductible expense or an allowable expense for that individual. Okay, clear on that? Any doubt so far? Now we have discussed about pension contributions. Third, let's come to at the time of retirement. What will happen? Individual, from the time he retires, from the time they retire, start getting pension credited to their account. Yes, correct. Pension will be credited to their account. So whenever the pension is being credited to their account, that will be considered as a part of their income, and income tax liability arises on that. It is not for contributions, but when they start getting it as a part of their income, it will always be considered as a part of their income, and income tax liability does arise on pension income. Okay. I think out of all the concepts of income tax, pension is a very easier concept to remember, guys. It will not take up a lot of time. It's just that you should remember the key things, that is grossing up and increasing your rate bands. These are the two things. In the exam, if they say directly gross pension contribution is so and so, you do not even have to do the 100 by 80. It will just be you will increase the rate bands. But if it does not say gross, if it says net amount, and this will always be given to you in the examination. Okay. If they say net amount, then you will have to gross it up, and whatever is the grossed up amount will add to your rate bands. Clear on that? Okay. With that, we have completed property income, employment income, and pensions. Next, let's move to income from self-employment and capital allowances. Income from self-employment. First, we'll discuss this, then we'll discuss about capital allowances, which are part of it. Income from self-employment, default basis is always cash. Okay. unless and until specifically mentioned in the examination, the default basis is cash. So in cash basis, what will happen? Total expenses incurred should be deducted from revenue received. I'll change this word from incurred to expenditure paid for should be deducted from revenue received. And here, what are the expenses we are talking about? All the expenses that are exclusively and necessarily for running the business. Like any expenditure that has been incurred wholly and solely for running the business are deducted from here, and not all personal expenses. Like say for suppose an individual is having some necessity, so he has so for that reason from the company's funds he has spent it for his personal use, like he has spent on bettings or something like that. So do you think that can be deducted from the self-employment income? Anyone? Let's say an individual wanted to buy a car for his personal use, not for the company's use. So he has paid it from the company's fund of 80,000. Do you think that 80,000 is a deductible expense? Yes, no, maybe. Anyone? Guys, I see everyone has become silent. Do you want a break or something? No one is responding, or are you guys asleep? Are you feeling sleepy or anything? Are you not finding the class interesting? This session is very much only meant for you guys. I want you guys to be as responsive as possible because it will help in evaluating what you're understanding about the concepts as well. Okay. So any expenses that are incurred not for the purpose of trading are non-allowable expenditure, and the expenses that are incurred, yes, it shouldn't be deducted, so it is a non-allowable expenditure. All right, they should be incurred wholly and exclusively for the purpose of business. Okay, after this what will happen is, the next important thing to remember is, if there are any fines like fines or any legal claims, do you think they're deductible? Are they deductible? Like legal claims as in any remediation costs and all of those. Do you think they're deductible? Any fines that are incurred should not be deductible, but if an employee has made, if the employee of the company has any parking fines, okay, employee of the company has parked somewhere or parked in a wrong place, and there's a fine that has been incurred which the employer has paid, that becomes deductible expense. Okay, make a note of this because this is something that is also tested in a major manner. Okay, fines, parking fines of employees who had incurred the fines during their working hours are a deductible expense, but otherwise fines are disallowed. All right, this is what you should remember for income from self-employment if it is cash basis. And if it is cash basis, I want you all to remember there is no distinction between capital expenditure and revenue expenditure. So Whatever assets you buy for the purpose of business will always be deducted, and then used to calculate your taxable income, your income from self-employment, except for cars. For cars, you will have capital allowances. Okay, this we are discussing about if the basis is cash basis. Always, okay, guys. Always remember, if the basis is cash basis, even your assets that you purchase for the purpose of business are always deducted, and then your income from self-employment is calculated. But for cars, you will have your capital allowances. Like if it's electric car, you will have first year allowance. If it is a car between 0 to 50 grams, it will be a part of your main pool. If it is more than 50 grams of emissions, it will be part of your special rate pool. These will be there for cars, but for other assets, you will not have it. Next and most important thing that you should remember, if any expense is incurred is partly private, then the expenditure should be prorated for business use. Okay, if there is, say, let's say 30% is for personal expense part of it and 70% is your business use, then only 70% of the expenditure should be considered in calculating your taxable total profits. Okay, clear on that? Can I get some thumbs ups, guys? Okay, great. With this, we have completed the cash basis. Now, let's move on to accrual basis. Accrual basis, everything is almost similar. The only thing that should be considering is it is receivable revenues, and payable expenses to be considered. Next important thing in this is that any capital expenditure should not be considered as a part of your taxable total profits, but they should be included in the capital allowances computation. So, if it's accrual basis, what will happen? It will be income less allowable expenditure minus X. From that, less capital allowances will give you your taxable total profits. Okay, this is how you should be calculating it. Are you clear with the income from self-employment? Any doubts on these so far? In cash basis and accrual basis, are you guys facing any issues or are you guys having any doubts? Yes, that is the next thing that we'll be discussing now. First, I want everyone to be clear with income calculation of all the income from employment and self-employment. So next we can move, so that we can move on to the capital allowances part of it. Okay. Yes. Now we have understood all of these. Now in capital allowances is something that we get as a reduction. So capital allowances is something of similar value to depreciation, but depreciation is a disallowed expenditure. Any non-cash expenses are always disallowed. Please remember that. like depreciation or loss on sale of asset, all of these are disallowed expenditure. So instead of those, we have for this we have something known as capital allowances. How do we calculate capital allowances? Capital allowances are calculated on the value of the asset, and the value is allocated over the course of its useful life. Okay, this is what you should remember about capital allowances. Now, in capital allowances, there are two different types. One is main pool, other is special rate pool. Okay, so what all assets form part of main pool? Majorly, most of the assets will be part of the main pool, plus cars which have CO2 emissions of less than 50 grams per kilometer. Which have, and most of the assets will be part of this. And main pool, similar to depreciation written down, written down depreciation method, here also you have something known as WDA, which is nothing but written down allowance on the value of pool. So written down allowance for main pool is 18%. This will be available to you in the tax tables. And next we have special rate pool. Now we should identify what all assets form part of special rate pool. Special rate pool includes cars over 50 grams per kilometer. 50 grams per kilometer. Next, you have something of long-term use assets or assets or long life assets which have a life of more than 25 years. Then 25 years and cost over 100,000. Okay, this is one. Whenever it is a long life asset, they will be mentioning it to you. You do not have to worry about that. And after that, it is about integral features. Integral features are nothing but, or if you have any irrigation system or piping and all of and etc., these will be the integral features, and all of these will be forming part of your special rate pool. And for special rate pool, the written down allowance is 6%. Clear on that, guys? Until here, are you guys clear? Any doubts so far? I will be explaining all of those again. I'll be explaining the format and all of those. But have you understood the classification between main pool and special rate pool? Okay. Now, along with this, we also have something known as additional allowances that are available. What are the additional allowances that are available? Additional allowances are, first you have AIA, which is nothing but annual investment allowance. Okay, how much is the annual investment allowance? It is 1 million and it will be provided to you in the examination. Can you see here? New cars annual investment allowance is 100% and expenditure limit is 1 million. Always remember this 1 million is for the entire entire year of the company preparing accounts. So it will be 12 months. Okay, we'll be discussing about long term accounting periods later. But annual investment allowance, And all of these will only be for 12 months period and not for long term. If it is long term, it should be prorated. We'll be discussing that later. But AIA for 1 million is for 12 months period. If the companies are trading for less than 12 months, this will be adjusted accordingly to 5 by 12 or 6 months. If it is 6 months, it will be adjusted accordingly. Okay, clear on that? Any doubts so far, guys? Okay. So annual investment allowance is available on any new plant and machinery that is purchased. Not okay. Not available on second-hand assets. Clear on this? Any doubts so far? Next, we have another type of allowance which is known as first year allowance. We have seen, and again, and AIA, let me tell you, not available on second-hand assets, and it is not available on cars. Always remember, annual investment allowance is not available on cars. That is you're talking about in corporation tax, but in individuals, first year allowance is only available for 0 grams per kilometer or emission cars. Okay. First year allowance that you're talking about over here is in corporation tax, but for individuals, first year allowance is only available for cars with 0 grams emission. Is that clear? Yes. So with this, we have completed all the allowances that are to be discussed. Next, we'll come to the format. The format will always be AIA, next FYA, main pool, special rate pool, and allowances. Okay, let's take balance carried down. Main pool will be this, special rate pool will be this, allowance is nothing. From this, what will have? New addition of assets. Additions of assets. Qualifying for AIA. For AIA. What will you do when it's qualifying for AIA? You'll deduct the value of the asset value here, and you will show the same amount in the allowances column. Next, addition car, 0 emission car, qualifying for FYA, qualifying for FYA. Next, it will be part of this. Then you will show the part allowance in this allowances column. Okay, this is how you do it. And after that, if after the addition of asset qualifying for AIA, let's take the asset value to be main pool asset value to be 1.5 million. So only here 1 million is allowable. The other 500,000, what will happen? It will go to the main pool. So here we'll add the other 500,000. Okay, from this, less any deductions. Always remember deduction. Sorry, I'll change the word from deductions to disposals. Okay, always remember if there are any disposals that have been made, the disposal value should not be taken at the gain. It should be lower of cost of the asset or the value at which the asset was sold. All right. Always remember if the asset is sold at a gain, you should never take that value, but you should take the cost of the asset. Okay. So minus disposals giving you X, we'll take an X value here. giving us now our total will sum this up is equal to sum of these values and sum these. From that, less WDA at 16%, sorry, at 18% and 6%. So here is equal to sum into 18% is equal to sum into 6%. How much ever these values come, they should be again taken in the allowances column. Now after that, you will calculate total allowance to be X, and after that you should also show balance brought down is equal to sum minus allowance minus WDA. Clear on this? This is how you should present your capital allowances at all times. All the allowance, whatever you take, you should also ensure that it is taken into the last allowances column so that you can add all the allowances to get your total capital allowances that are deductible. All right, clear on this, guys? Any doubt so far? Yes. So this gives you total allowances. Now, coming to another important concept. Always remember your total profits are calculated based on the accounting period. That is nothing but the way the company prepares its accounts. Or the book's closing date. But when calculating taxable income from self-employment, it should be calculated from 6th April to 5th April only. So let's say the profits from self-employment, the business is from 1st January to 31st December. Jan to 31st December. So what will happen? Step 1 would be calculate the total profits, calculate the taxable total profits for 1st Jan 2023 to 1st Jan 2024 to 31st December 2024 and 1st Jan 2025 to 31st December 2025. Now, for step 2 would be the trading profits to be included. Income from self-employment to be included as a part of taxable income would be only from 6th April. So we'll consider it to be 1st April 2024 to 31st December 2024. That will be 1, and 1st Jan 2025 to 31st December 2025 profits. Okay, clear on this? Always remember that the profits, though you calculate for two accounting periods, they should be adjusted to the tax year. So the total profits from year one and profits from year two. From year one, you'll be taking 9 months. From year two, you'll, sorry, it is not 31st December, it will be 31st March. Very sorry, guys. Okay. Year two, you will take 3 months profit. So total will give you a 12 months of profit that will be considered within the tax year of 25-26. Hope that is clear. With this, we have completed income from self-employment as well. The partnerships is again very much simpler. It's just that the understanding is to be clear. It is same as you calculate income from self-employment. First, you calculate the total income from the total income, and then you allocate it to the individual partners according to their profit sharing ratio. All right, clear on this? I hope everyone is making notes of these, because making such notes will really help you in your examination preparation. In our 2.5 hours of discussion, I think we have covered majority of the topics, and we have covered all the important aspects that are to be remembered and ensured that they are very much perfect. Tomorrow in our corporation tax, we will not have such an extensive discussion, because majority, like I've told in the beginning of the session, 40% of your total preparation will be from income tax only. After that, once you're as thorough as possible with income tax, your other topics will become easier to remember, because the heavy concepts have been completed in income tax. Okay, all right, guys. Hope I'm clear until here. Can I get a few more thumbs ups from people to know if people are actually listening to the conversation or not? I can only see Nafa responding right now. What about the others? Yes. Khadija also has mentioned. Sundar, that is great. I can see the people responding. I hope the concepts are being. Are you guys able to understand them, or are you feeling it is a bit more complicated and lengthy? Are you guys good with it so far? Next, we'll complete another small topic. Small, it is trading losses. The trading losses that arise. Trading losses, it is very much straightforward, guys. You just have to remember the rules. One is any trading losses that arise. You have an option to set it off. First, option one is carry it forward and set it off against future profits. This is option one. Trading loss are nothing but a company has made trade losses. So those losses, how do you calculate? It is your income minus expenses minus capital allowances gives you your trading losses. Okay. Always remember, trading losses arise only after capital allowances and not before that. So this is one of your option. One is to set it off against your future profits. Option two would be to set off against total income, either only in the current year, or in both current year and previous year. Okay, you can set it off against your current year income, total income, or you can plan on setting it off against your previous year income, or you have an option to set off against current year and against the previous year as well, in any order. That is also, in any order, is also applicable only for individuals. Corporation tax we will discuss. For corporation tax, how the losses are set off, we will be discussing that tomorrow. tomorrow in the session. Okay. These are the two options that are available. Okay. Whenever you have any losses to be set off, always remember to show your income from self-employment to be zero. Employment as zero, because income from self-employment as zero, because the trading losses will be considered or shown as a relief. If you see the format, is the screen visible to you guys? Is the screen clear, or do you think do you want me to zoom it in a bit more? Okay, great. So if you see, this is how you should present it. Non-savings income, savings income, then your dividend income. Gives you your total incomes, and from the total income you deduct your relief, and trading loss is actually a relief. So this loss, if you're showing deducting it from your total income, this should be shown in the relief column. So if you're having that, trading income should be shown as zero, and then in the reliefs part you should show it as less trading losses, and that is how it should be presented. Okay. Always remember, in tax, presenting and using zeros plays a very vital role. Though your answer might be the same, if you do not show the zero, you will not be getting the marks for it. All right. And that is how you do it. Next, we have opening year losses. If any business that starts in the initial year, do you think it will make profits in the first year itself? Yes, no, maybe? No. Absolutely right. In the current year, majority of the businesses do not start making profits in the first year itself. So whenever an income self-employed person start making losses in the first year, they have an option to carry it back to the prior 3 years. Carry the losses back to the prior 3 years and set it off in FIFO basis. That is, we are talking about 2025 now. The current year is 2025, 24, 2023, and 2022. So what happens? He has made a loss of minus 40,000. Okay. So what does the individual do? Individual can set it off against 2022 first, then 2023, then 2024. This is the format that this is the order that they should set off their losses in. Okay. Clear on this? Great. Now let's come to cessation. Cessation is nothing but when the company ceases to exist. In the last years, usually most of the companies close down because they are not profitable. Is that correct? Yes, most of them close. So what happens when that loss comes in the closing? Loss arising in the closing year. Closing year can also be carried backward, can also be carried back to the prior 3 years, but the condition here is LIFO, which means if he has made same 25,000 loss, this is the first year. But let's assume in this scenario, this is the last year of business. So what are they doing? This 40,000 should be first set off. This is the first priority. This is the second priority. And this is the third. Clear on that? Whenever it is opening year losses, they should come in FIFO. When it is closing year, they should come in LIFO. All right, clear on this? Great. With this, we can conclude on all our types of income. And with this, we have studied and we have discussed the most important question that we had. What was the important question that we had? what are the different types of income that individual has. This has been completed. Next, we will be answering the third question, that is, how is income tax computed? Income tax is computed by taking all the types of income, that is non-savings income, which includes trading income, employment income, property income, pension income, that we've discussed. And next we have savings income. Savings income is nothing but any interest income that you receive is considered as savings income. So building society interest or bank interest. And then you have your dividend income. From all these, if you reduce the reliefs, what are the reliefs that we have discussed so far? One is loss relief, and the other is qualifying interest payments. That is, if you purchase any asset for the purpose of doing your business, or for the purpose of doing your business, or if you take any loan for the purpose of doing your business, or for the purpose of buying shares in a partnership, or sorry, for the purpose of doing your employment or job, any interest that you pay on that is a deductible expense. So that will be forming a part of your relief and known as qualifying interest payment. Will give you your net income. And from that net income, if we deduct our personal allowance, how much is our personal allowance? Can anyone tell me?
12,570.
Correct. It is 12,570. Again, if having a doubt, you can always look it up in the tax rates. It will be available. Gives you your taxable income. And from this taxable income, what do? We'll have to calculate. So sorry. Tax calculation based on the non-savings income rate of tax, the savings income rate of tax, and the dividend income's rate of tax. For non-savings income and savings income, the tax rates are same, but for dividend income, it will be different. Okay, so once you calculate the total tax payable, from that you reduce pay as you earn. Pay as you earn is nothing but the tax liability that has already been deducted from your employment income. Like whenever your employer is paying you your salary, it will always be net of anything that is being paid to the HMRC directly. Okay, that is known as pay as you earn. Once you deduct that, you will be getting your total your tax liability, adjusted tax liability. From that, you reduce your marriage allowance and finance cost for residential property that we have discussed earlier, giving your net tax paid to be paid by an individual. Whenever they ask for tax liability, you will calculate the total tax liability after deducting all of these. All right, clear on that? Provides loan for computer. So employer loan will always be considered as a beneficial loan. Usually computer and all will be considered as less than 10,000. You will be considering that as a wholly and 10,000. So it will be an exempt benefit. Okay. So always, yes, child benefit charge is obviously added. Yes, that's what we, in this, if you see, oh, I don't think I've added that, but yes, benefit charge will be added. Thank you for identifying that. So, are you guys clear with everything so far? The topics that we have discussed? I think we have discussed income tax in detail for the last 2 hours. Are you guys very clear? Are you guys having any doubts so far? Okay. Do you think we can move on to solving our question now from the past paper? The most important thing in the webinar is to solve the question, because I want you guys to know and understand how to present the question better. All right. So are you guys ready to move on to solving the question now? Yes. Can I get a few more thumbs ups to see how active the people are, because we are solving the question? That is great. Okay. Let's quickly move on to solving the question now. Let's increase this. I think we're in the B part of it. Yes. So here, Let's start off with reading the question. Guys, this will be in the examination. We'll be solving this in the exam portal itself, ACCA portal itself. So I want you to also see how we are presenting the answer so you can understand how you score your marks. Okay. Michael commenced self-employment on 6th April 2024. Okay. So he's starting it in the beginning of tax year, which is making our job easier to calculate our taxable per income. Okay. For the year ended 5th April 2025, Michael's accounts have been prepared using the default cash basis. Okay. However, his bank has requested figures that have been prepared using the accrual basis. So he has used cash basis in his preparation of tax preparation, but the bank wants to have it in accrual basis in order to understand things. This is something that we'll have to remember. Now, what is it saying? Accounts prepared on the cash basis are as follows. The receipts are 194,300. The expenses cost of equipment is 6,200. Loan interest is 2,400. Mileage allowance is 3,780. Other allowable expenses are 105,300. And each of those have been discussed in detail in the notes below. The receipts of 194,300 exclude amounts owed as receivable of 6,900. If you can see, because they're expecting us to prepare cash accrual basis, do you think we should be taking the receivable amounts or not? It says receivable over here. Do you think we should be taking the receivables? Yes, no, maybe?
Yes.
Correct. So this will be highlighting that. Next, on 10th April 2024, Michael purchased equipment costing 6,200. Equipment that he has purchased is 6,200. It has been deducted as an expense. But because we might be preparing accrual basis, do you think it can be deducted that way? No, because equipment in accrual basis will be part of your plant and equipment. So capital allowances will arise on it. All right. Next, loan interest is in respect of a bank loan of 30,000 that Michael took out to provide to working capital for the business. So the loan interest of 2,400 is actually for providing for the working capital of business. So do you think the loan was taken fully and exclusively for the purpose of business? So is it an allowable expenditure? Yes, it is. So we'll be highlighting this amount as well. Next, during the year ended 5th April 2025, Michael drove 8,400 business miles and claimed the fixed rate mileage allowance of 3,780 on this. Okay. If Michael uses the accrual basis, he will not use the fixed rate mileage allowance. So they do not want to use the fixed rate mileage allowance at all if Michael uses the accrual basis. Okay. This is one to remember. Next, Michael purchased his car on 6th April 2024 for 28,800. The car was purchased new and has zero CO2 emissions. It is used 70% for business mileage and 30% for private mileage. So do you think you'll get capital? So this is a new car with zero CO2 emissions. So which type of capital allowances are available for this car? FIA. Absolutely right. So do you think FIA is available for the entire 28,800 or is it available only for 70% business mileage?
70%.
Absolutely right. It will only be, so 28,800 should be prorated to consider the 70% of business mileage usage. Clear? And this 30% private usage, we will strike it off because it is not relevant to our preparation. Next, total car expenses including private usage for the year ended 5th April 2025 are 5,430 as calculated. None of which are included in the net profit calculated on the cash basis. Okay, net profit, they have used fixed rate mileage allowance, so they do not want to take the other in the costs, these costs. So car running costs were 3,220. The fuel was 1670. Speeding fine is 1880. And parking fines incurred when Michael was visiting the clients was 460. Car running cost, do you think it is allowable cost? Yes, no? Yes, it is allowable expenditure, but it includes private usage. So this should be adjusted for our business usage of 70%, correct? Okay. So fuel is an allowable expenditure. Yes, no, maybe. Is allowable. So in fuel, do we take the 100% or again do we have to adjust it for 70% of the business usage?
%70.
Okay, Nafa says it's 70, Mitushi says it's 100. Can others also tell me what do we take? Should we take 70% or 100%? Anyone else? Does anyone else want to respond? Is it 70 or 100? Okay, since no one is responding, let me take it up. Always remember, if there is any private usage, we will be taking only the business proportion of it and not the private usage part. Okay, next. Speeding fine incurred by Michael. Is it an allowable expenditure? Speeding fine incurred by Michael. Is it an allowable expenditure? Guys, even if you don't respond, you can just put a thumbs down if it is not allowable, and if it thumbs up, if it's allowable. Okay. No, Nafa says it's no. Correct. Speeding fine is not an allowable expenditure because those are fines that we have discussed earlier. Fines are always disallowed unless and until they are incurred by employees on the course of business. Next, we see parking fines when Michael was visiting clients. Do you think this is allowable? He has gone for the business purpose and it is also to visit the clients. Do you think it's allowable? No, it is not. But if the same thing, if it says parking fines if incurred when Michael's employee was visiting clients, it becomes allowable expenditure. All right, clear? Great. So now these both are allowable and these both are disallowed. Let's strike through. Okay, next, other allowable expenses of 105,300. So this 105,300 has been taken into consideration already over here. But from that, exclude amounts owed as payable of 5,700 at 5th April 2025. So out of these amounts, the allowable expenses, other allowable expense of 5,700 was excluded because it was payable and not paid, which is a right basis, correct? Because in cash basis, we don't take payable. But here we might be doing accrual basis. So do you think this 5,700 should be taken now or no?
It should.
Correct. It should be considered. So we'll highlight it. Now we're done with the part of it. Next, we'll move on to the additional information. In this, it says, in addition to self-employed business, the following information is relevant to Michael's income tax liability for the tax year 24-25. 1. Michael is employed part-time. His gross annual salary was 6,400 for the tax year 24-25. Okay. Michael's employer contributed 820 into their occupational pension scheme, and Michael's contribution into the scheme was 656 pounds. Do you think this what will happen to this 820 pounds? Is it relevant to us?
No.
Because it is an exempt benefit, correct? So we will show it with a 0 in the exam, in the format. And Michael's contribution, what will we do with that?
Deduct it.
Correct. We will deduct it from the employment income. Great. Next, we have Michael lets out a furnished spare room in his room For the tax year, he has received rental income of £8,400 and incurred additional allowable expenditure of £1,260 as a result of letting. Michael uses the most favorable basis regards the tax treatment of the furnished room. So, what is this furnished room that we're discussing about? What relief is available for this one?
Rent a room relief.
Correct, rent a room relief. So it says expenditure of 1,260 or whatever is favorable. Which one do you think would be favorable? Taking the 1,260 expenditure or 7,500?
7,500.
Absolutely right, because that reduces our rent property income. Correct. So 1,260, is it relevant to us? It's not. Correct. So we can just strike it ahead. After that, Michael received savings income of £480 during the tax year. And post that, Michael made a charitable gifted donation of £700. So charitable donation, what will be the tax criteria, tax rules for it? It is always similar to personal pension contributions. So whenever there's a charitable gifted donation made, it will always add up to your first, it will be grossed up. If it is get grossed up, then it will add to your rate bands. Clear? With me so far? Yes, no, maybe a thumbs up. With this, we have come to our end of our question reading. Now let's start solving the question. As Michael has started to trade on 6th April 2024, briefly explain the four badges of trade which may be used to distinguish between trading and non-trading activities. Okay, so here they are asking us about four badges of trade that will help in identifying trading and non-trading activities. What are badges of trade? Badges of trade are nothing but, so whatever a person does, do you think it is considered as business? Do you think it is right to consider any person who is selling something to be called business? Let's say I have 3 or 4 watches with me and I have decided to sell one watch. Do you think I am considered a businessman?
No.
Correct. So for that, we have a few identifiers. That is what they're asking us to write. And how many marks is this for? So 2 marks, which means out of for 4 badges of trade, each trade will be considered for half a mark. Okay. So we'll literally copy this from here. So this is a generic question. They are not asking it specifically to Michael's trading. Correct? So here we're talking distinguish R is what we should write. And let's start off with writing. What will be the first one that we should write about? Length of ownership. Length of ownership. If the individual owns the owns the things that they wish to sell for a small period of time, then it is considered as trading. Correct? Do you agree with me on this? So always what is trading and what is not trading? If an individual has a lot of inventory that they want to clear out as early as possible, that is trading. But what if the individual holds it in order to gain profits, to gain any shares? Sometimes shares might be there that an individual holds for a longer period of time, then sells them. Is that considered as trading? Trading as in, do you put it as a part of your, trading income or income from self-employment? You show it as a part of your capital gains, correct? Yes. So length of ownership should always be small period in order to be considered as trade, in order to be considered for trading. Next is motive. If the individual motive behind selling is profit making, then it is considered to be trading. Correct? With me here, profit motive is obviously a clear distinction in order to understand if it's trading or not. Because if the motive is just to get rid of the asset because of the obsolescence, or because it has become outdated, or because they have upgraded their assets, do you think that's considered trading? No, absolutely right. Next, frequency. If the individual sells on a regular basis, then it will be considered trading. Agree with me on this point? I think this is self-explanatory, because if a person, I have 4 or 5 watches with me and I decide to sell only one, is it called trading? No, it's not. But if a watch company is regularly selling assets, like they sell multiple watches on a daily basis, so do you think that is trading for the watch company?
Yes.
Correct. So frequency is an important aspect. Fourth point, and this is the most important activity: supplementary activities. If the individual is also performing supplementary activities in order to increase the sales, it is considered trading. Example, marketing. Correct? An individual is actually taking up other activities instead of just buying and selling the goods. He's also taking up other activities like marketing in order to sell the product. Don't you think that shows that he's trading? Yes, no, maybe?
Yes.
Yes. So with this, writing each point like this will give you half a mark. Half mark for this, half for this, half for this, and half for this. And in the examination, the other thing to remember, you do not have to worry about spelling mistakes until the word is clearly understandable. Like if I can show you here, I'm not telling that you should be doing that, but if you do it also, it's okay. If you see this, I wrote regular instead of regular, and you will be getting a mark for it, but it's just that I wanted to show it to you guys. Okay. Next, we'll come to the question where they are asking us calculate the Michael's tax adjusted trading profit for the year ended 5th April 2025 if we elect to use the accrual basis rather than cash basis. This is what we thought the anticipated question to be. Cash basis is prepared, we'll have to prepare the accrual basis. You should start your computation with the cash basis of net profit figure of 76,620. So here we should be taking this, and from this, if anything is to be added back, we add back. Anything is to be deducted, we deduct it. And then referring to the notes in 1 to 5, indicating by use of 0 on any items which do not impact on your computation. However, marks will be awarded for any other approach to determine the tax adjusted trading profit using the accrual basis. Okay. And the second note that says you should assume that Michael does not claim fixed rate expenses. Okay. So now the question is clear. We should calculate only the tax adjusted trading profit and not the total taxable income. Here it is for 7 marks. So we'll start off with the question. Michael's tax adjusted trading profit for the tax year 2024-2025. Okay, always guys remember the presentation should start off with whatever you're writing about. Okay, now let's start off. Net profit is our figure, which is 76,620, correct? Because that's what they've asked us to start it from. To this, what should be added? Everything that is included as a part of our notes. Okay. Here, first we will add something that is included as a part of our note 1. It says the 194,300 excludes receivable of 6,900. We have discussed earlier about this as well. So we will be adding the receivable because it was not included as a part of our profits, correct? Thumbs ups, thumbs down. Receivable is a part of our income, so it should be added. So it will be 6,900. Add 6,900. Next, the cost of equipment has been deducted. Cost of equipment has been deducted. But is it correct to deduct it? Cost of equipment accrual basis, don't you think cost of equipment will be part of our capital allowances?
Yes.
So cost of equipment, because it has been deducted, what do we do to reverse the effect? We add it back. So 6,200 should be added back. Next, we have loan interest. Loan interest, what is happening? The loan was interest was relating to a loan that was taken to provide for working capital of the business. So is it an allowable expenditure? Yes, no, maybe. It is. Because it is allowable expenditure, what do we show? We show it with a 0. Show it with a 0. Clear on this one so far? Next, what is happening? A mileage allowance. What has been told? Mileage allowance is note number 4 and claimed a fixed rate mileage allowance of 3,780. But here what has been told? Michael does not claim fixed rate expenses. So what should we do? We should add it back. Correct? Fixed rate expenses. Because they do not want to take it, we should consider that it should be added back. Next, what do we have? 4 are done. But in this, there are other considerations that are taken. That is, Michael purchased his car for 28,820. So car purchase and the emissions, it will be part of our capital allowances. So this list, this is the price that has been taken. So it will capital allowances, not right now. Next, we have the costs. Correct? Less car expenses. How do we show that? Car running costs is equal to, how much is it? Is equal to 3,220. 1,220 into 70% because business use, correct? I have also made a mistake here. Always remember, show it with a minus. Fuel is equal to minus 1670 into 70%. Correct? Because they've asked us to show it with zeros. What will we do for the next one? Speeding fine. We will show it with 0. Parking fine. Show it with a 0. Okay. You've considered all the expenses. Next, we will have less allowable expenses as well. We have another allowable expenses, correct? Of how much is it? 5,700 because it is payable and accrual basis we will be considering it. So minus 5,700. From this we will be deducting our capital allowances, showing this in a working one. Always, so this can be your choice, guys. I would prefer showing the workings here rather than showing it down because it becomes easier to take the values to the side. Okay. So working one, capital allowances. How do you get capital allowances? First, it should be AIA, FYA, main pool, special rate pool, allowances. Correct? This is a format I told you. Now, since this is a first year of business, we'll have anything in main pool or special rate pool already? Okay, Mitushi, I think I missed your question about why is it shown 0. Can you tell me which one are you talking about?
The loan interest.
The loan interest, so it is an allowable expenditure, and in calculating our the 76,620, the loan interest has already been considered, correct?
Yes.
So we got to 76,620 after deducting 2,400. And even on accrual basis, we will be taking that 2,400 anyway. So that is the reason why we have not deducted it again, because it will lead to double deduction. Yes,
Yes.
because our value itself is starting from 76,620. So we do not have to consider the one that has already been considered.
Okay. Got it. Thank you.
Yes. So now let's start off no WDV, correct. So we'll start off with cost of equipment. Cost of equipment, what is happening? It will be a part cost of equipment. Equipment will form part of our AIA. We'll be getting annual investment allowance because our threshold is 1 million, correct? So first, what do you write? Balance brought forward is 0 for main pool and special rate pool because this is a first year. Now cost of equipment, it will be 6,200. In your allowances also, you can show it as 6,200, correct? Yes, with me so far? Because whatever the asset value, you are getting full AIA on it. So nothing will be transferred to the main pool or special rate pool. With me on that so far? Okay, I didn't understand. Instead of showing the working capital allowance AIA and the shown amount, I didn't get you. Yeah, so you want to calculate everything over here. For simpler things like this one, I think it can be done, but otherwise it is better to present it in a manner so it is understandable of how you got the figure till there. Okay. Yes. So even in your exam presentation, they might not show this AIA and FIA. Instead, they show it in the bracket saying that eligible for AIA. But if you present it this way, everyone will be able. It will be easy to understand. Okay. Next, we have car with zero CO2 emissions. Zero CO2 emissions. How it will be part of AIA or FIA? FIA, correct. So it will be, do we take 28,000 entirely or do we adjust it?
Adjust.
Correct, into 70%. So it is 20,016 is equal to minus this value. Simple. Now you have completed both the assets that were there. Did we miss out anything? No, correct? Yes. Now giving a total to is equal to sum 6,200 plus 20,160, giving a total capital allowances to 26,360. Let's show the capital allowances here is equal to, always reference the answers, is equal to here. If you put it, you'll get the exact value here, giving you your total answer. Okay. With this, we have considered everything because they've asked us to consider only notes 1 to 5. We have considered everything. Yes. So now what were we expected to calculate? Tax adjusted trading profit. Did we get that? Tax adjusted trading profit, which will be is equal to sum This 58,017 is your tax adjusted trading profit. And with this, how much do you score? You score 7 marks. And 7 marks, correct? And in that, these zeros itself are giving you 1.5 mark, literally without doing anything. If you remember the rule and write a zero, you got your 1.5 marks right there and there. Okay? Clear on that? Most of the students that I have seen make mistakes in identify and writing the zeros, though their answers are correct. Everyone misses out on writing the zeros. And the other common mistake is the one that Mitushi has asked earlier is about loan interest. Loan interest, any expense that has already been deducted, you do not have to take it again. Though it has been given in the notes, it does not mean you will have to reconsider it. If it is allowable, show it as a zero because it has already been deducted. Clear? With this, we complete the second part of the question, and from this, we have scored our 9 marks. We are still left with our 6 marks part, and that would be the next question that we'll be looking at. Okay. Here they are asking us to calculate Michael's income tax liability for the tax year 24-25. Your computation should include the tax adjusted trading profit you have calculated under the accrual basis in part B and should list the items in the additional information section. Indicate by using the zero on any items which are not taxable or deductible. Okay, so here it will be income tax. So first we'll be taking the profit that you've calculated in the previous section. So if your answer over there is wrong, whatever value you get in this section, in the C part of the question will also be wrong. So because of that, it is very careful, because everything is related, it is very careful to ensure everything is right. Okay. So again, let's copy this one because we do not have to waste our time in writing things that are duplications. Okay. We're calculating the income tax liability. Now, what are the different types of incomes that we have seen? One is trading income, the other is employment income. Next is a rent a room income. Next is savings income and a charitable gifted donation. So there is non-savings income and savings income. So always, what did I tell you? Always present it as non-savings income. Because we don't have dividend income, we can leave it and savings income. Then show the total. Writing this format will help you in calculation because there are priorities to be given. Whenever taking personal loans, it's always important to prioritize. Which income is to be prioritized when taking personal loans?
NSI.
NSI, then savings income, then dividend income, correct? So for that reason, when you show it in this manner, you will be able to identify if what income is being prioritized, okay? So now let's come to first trading income that we have already calculated. Here we cannot reference it from the previous tab. So we'll take a look at it and write it down. It is 58,017, correct? We'll bold this because that's our solution. But even if you don't do it, that's not an issue. 58,017 is our trading income. Next we have employment income. Employment income, what is there? We have contributions of occupational pension scheme from employer and Michael. So it is better to show it as a working because you'll get the marks clear in a clear manner there. Working one. Okay. Show the working to the right. Working one. Employment income. Employment income. So what is happening first? Salary. How much is your salary? 16,400, correct? Work 16,400 less employer's contributions. Employer's contribution, oh sorry, Michael's contribution. Let's always take the employee's name. Michael's contribution. Correct. We will have to deduct it as we have discussed earlier. It is minus 656. Yes. From that, employer's contribution. Do we take anything here? What do we write here? Can anyone tell me what do we write here?
0.
0. Absolutely right. Writing the 0 gives you your half mark. Now gives you your total employment income, which is equal to sum this. 15,744. Now it will be coming as a part of your non-savings income only, correct? Employment income?
Yes.
15,744 gives you your answer. Okay? Clear with how do you do the presentation for your employment income? Whenever there are adjustments, always remember to show it as a working to make it easy. Okay? Next, we have property income. Property income, rent a room relief. If you write this, just it is enough because you're taking whatever is beneficial. Correct? You do not have to show the workings for both of them. If you write this directly, it is enough. Okay? So it will always be equal to 8,400 minus 7,500. Yes, no? Correct? Is that not the beneficial one for us?
Yes.
Correct. So now we have considered all of these property income. Last, we have nothing but received savings income of 480 pounds. So this savings income will come as a part of our savings income. Simple, 480 pounds, giving us total to be is equal to sum total will be is equal to sum these both. Correct? Is the presentation clear until here, guys? Any doubts so far?
No, that's
Correct. This is our total income. From this, if we deduct our personal allowance, always again, major students I know that they know what personal allowance is and they know how it is to be considered. But when because of the hurry of the calculate in the examination and all of that, they tend to miss out on the personal allowance and they start directly computing income tax on this total amount and forget about considering the personal allowance. Okay. So for that reason, show the personal allowance and that is when you will be getting your taxable income. Personal allowance, how much do you get? 12,570. Because the income is completely being covered under personal allowance. I mean, non-savings income is more than personal allowance. So the entire personal allowance will be allocated to non-savings income. Is there any possibility that you can be like, okay, no, first I want to allocate only some to non-savings, then some amount to savings income? Can you do that?
no.
Exactly, we can't. So then that gives us a taxable income. After this, sum to this. Okay, let me write 12,570 here as well. And is equal to sum okay. Here it will be 0 anyway, correct? No availability. Now with this, do you remember the format that I told you? Always it should be trading. Once you've calculated all of these, personal allowance is done, we got a taxable income. From that, we should calculate the calculate the tax. How do we calculate the tax now? For non-savings income, tax on NSI. So non-savings income, is it falling? Is everything falling under the basic rate band? Yes, no? No. Because the basic rate band is only 37,700. But we have income of 62,091. So now what is happening? 0 to 37,700 at 20%, correct? Yes, no? Yes, I will add that. That's what I want to show it to you in a separate way so you'll be able to understand it better. I want to, because that is clear to understand, But when you're presenting the answer, it might get a bit confusing. So I will be showing that. So 37,700 is equal to 37,700 into 20%. Next is gifted donation slab increase. So now what will happen? 700 will also be taxed at 20%, yes? Next, what is there? Next, remaining income. At what percentage? It will be 40%. 40%. So how much would that be? Is equal to 62,091 minus 37,700 minus 700 into 40% will give you 9476.4. Correct? With this, you have calculated the total income, total tax liability arising on non-savings income. But we are also left with savings income. Now, what will happen? In savings income there is also something known as nil rate band. Yes, no? Does anyone want to explain to me what nil rate band is? If you see, if an individual falls between the basic rate taxpayer, then their nil rate band is 1,000. So until first 1,000 pounds, it will be calculated at 0%. And for higher rate taxpayers, the first 500 of savings income will be taxed at 0%. So savings income, if we see here, it is only 480 pounds. So savings income will come as a part of our nil rate band. If you show this is equal to 480 into 0 gives you your total savings income done. So with this, have we considered all the incomes? Non-savings income we have considered, then we have considered savings income as well. Correct? Giving our total tax liability to is equal to sum all of these. Total tax liability to be 17,156.4. Okay, with this we have calculated our tax liability. Because are there anything else that is to be considered? Do we have any pay as you earn or any finance cost or any child? No, we don't. And because of that, now we have completed. So sorry, guys. With this, we have completed our tax liability calculation, giving us our final 6 marks. Yes. So now, did you understand how we do the question, guys? Did you understand the presentation? We can round it up. Yes, you can write it. And if you don't round it up also, that's fine. Completely fine.
Okay.
Yes. And this is how you solve your section C questions. Clear? So with this, we come to the conclusion of our the first day one of webinar. I hope everyone has understood a lot of things. I will be sharing this deck with all of you for all of your revision, and I'll also be sharing all the links and tax rates and all of those by tomorrow morning. And I'll also be sharing the link for the day two's webinar that we'll be having tomorrow at around the same time. Okay. So So guys, whoever has not registered for the revision course and they feel that you will want to revise, want to have a videos similar to this discussion that we had, you can also enroll to the revision batch by you can register by calling to by from logging into being ACCA, or you can also ping me. I can share the details with you. Okay. Bye guys. I hope you had a great time and I hope you have understood a lot of things. If you have any doubts, you can always reach out to me at any point of time and I'll be there to help you out. Okay.
Thank you.
So if you guys, okay. Bye guys. Have a great day. All the very best for your preparation. And let me know for any doubts. See you tomorrow again.